Okay, and welcome back, students who are taking financial accounting, and we're still working on the theory videos for Chapter 2, Analyzing and Recording Business Transactions. And this here is number 6 in the series. And we left off in the last video making, going through the process of how to make a journal entry, okay, and what it looks like in a journal, okay. And now we're going to talk about T accounts. Okay. Now, T accounts are nothing more than a T, okay? And it's a tool that you use in order to understand a transaction or understand what's in an account, okay? For example, I'm making this journal entry and I know that I'm using the cash account and the common stock account. So I make a T and I label whatever that T is. Okay, and that one's a cash and this one is common stock. Okay, and the conventions of debits are on the left and credits on the right still holds true. Debits are on the left and credits are on the right. Now, if I'm taking this journal entry and I want to see what it looks like to make sure that my debits equal my credits, okay, well, I can take my debit for 10,000 and write it on the debit side, and my common stock, I'm going to write it on the credit side, okay? And I can see that my debits equal my credits. Now, this becomes more important, especially when you have, more than two accounts, okay? It's a lot easier to see your debits and credits when they're, sure, this is very easy. Okay, 10 and 10. Right? But when you have multiple accounts, it becomes a little bit more difficult. And by using the T account, it allows you to be able to understand, that your debits still equal your credits, because what you're doing is you're using the T to act as if it's a ledger account. Again, it's a tool. You don't want to take the journal entry and be posting it to your ledger accounts and then trying to analyze your ledger accounts. You want to use this on a scrap piece of paper, creating the T accounts to see what it would look like if it went into your journal. Into your ledger accounts. Okay, to be able to understand that, one, you made the correct entry and that the debits equal the credits. That's one use of the T account. The other use of the T account is as a ledger account. Okay, if we look at cash here, we can see we have, as an example, we have a debit to cash. Okay, well, let's say I had another debit to cash for 5,000, and then let's say I had a credit of 6,000 to the cash account. Okay, this is what my general ledger cash account should look like, and I can quickly draw up a balance. Okay, I have 15,000 on the debit side, and I have 6,000 on the credit side, so that means my balance would be a $9,000 debit. Okay, that's what the general ledger account would look like if I had my journal entries posted into the account and I had created a balance in the account. If you watched the previous video, I had talked about making these additional journal entries into the ledger accounts. So this would be, my second entry for 5,000, and that means my debit balance should be 15,000. Then when I make my third entry for 6,000, okay, my balance should be $9,000. Okay, that's what it would look like in my actual ledger account, but I'm using this here T account as a quick down and dirty, let me have a quick look at, the information so that I understand what is in that actual account. So you can use the T accounts in multiple ways, and the reason why it's called a T is because debits are on the left and credits are on the right. It looks like a T. If you watched my theory videos for, introduction to accounting, or even some of the stuff, as part of the chapter 1 theory videos, you saw me say assets equals liabilities plus equity, and I drew a T account underneath the entire accounting equation, right? Why? Because I use the equal sign to delineate Debits on the left and credits on the right. That's how I know the normal balance of my assets is a debit. That's how I know what increases my assets. And on the right-hand side, that's how I know what the normal balance is for my liabilities and equity. That's how I know what increases liabilities and equity. I'm using this T account, okay, in multiple uses, all right? It's a tool that you use when you don't understand something. After some period of time, you're going to become accustomed to a lot of this. You're going to internalize a lot of it. But every so often, you're going to run into something that you're not sure about or you don't know. And you go back to this fundamental of using the T accounts to be able to work out your journal entries or your ledger accounts, right? Your GL accounts, right? Or your accounting equation, right? It's just a tool, right? So in the last video, you saw me, let me jump up to the slide. In the previous video, you saw me work through the journal entry. How I wrote it into general ledger, I wrote it into the journal, and then I post it into the ledger accounts. Okay. On this slide here, I'm not going to repeat how I'm posting from the journal into the ledger accounts. You saw me do that in the previous video, okay? But the reason why I'm talking about T accounts is because the information in the book, it presents, a lot of the illustrations use this concept of the T accounts, okay? So as we move on here, this is my general ledger, okay? And it's showing the balance sheet and the income statement, okay? And if you recall from my introductory videos and from my theory videos, I'm showed the assets equals liability plus the equity, okay? All on the balance sheet here. And I had said revenues and expenses and dividends really should be on the income statement, okay? Because the dividends are taken out of your profit or loss, right? But revenue and expenses are on your income statement. Now, assets is a category of account, liabilities is a category of account, equity is a category, revenues is a category, and expenses is a category. Okay. Equity is a category. Okay, so these are categories of accounts. And if you recall on the chart of accounts, okay, a chart of accounts is nothing more than a listing of the general ledger accounts. And if you also recall, a trial balance is nothing more than a listing of the general ledger accounts plus the balances in those accounts, okay, as of a specific date, whatever that date is. Specific, you'd think I'd be able to spell specific, as of a specific date, okay? So why am I looking at this illustration and I'm going through all of this, okay? Well, in these first chapters, the authors like to use this as the convention, okay? So underneath assets, they're saying that, oh, we have a cash account, we have a supplies account, we have an equipment account, and we have an accounts receivable account. But notice what they're doing. They're using a T account. There's the T account for cash, okay? There's the T account for cash. Here's the T right here, okay? Here's the journal entries when they got posted to the ledger account on the debit side, and here's the credit side. And what did they do? They created the balance in that specific account. There's a balance of what, 16,850 in this here cash account. Okay. For the supplies account, there's one entry, so the only amount, the total balance is going to be 350. The same with the equipment, has one entry for 4,000 on the debit side, and the same for accounts receivable of 1,900. Okay. that's no different than what they were doing here, except, this here only had one transaction. Here's my ledger account for cash. Here's my ledger account for cash, okay? And there was one entry here, they had a debit, and they kept the running balance here in the balance column. So as they entered more transactions, okay, whatever those transactions were, they kept on increasing or decreasing the running balance in that particular account. And that's what it looks like in this T account with just one balance. You don't see the running balance, but you see the 1, 2, 3, 4, 5, 6, 7 transactions. There's 3 debits and 4 credits here. The total of those 7 transactions is this balance in the account. So, liabilities, they have accounts payable, notes payable. Then there's common stock, dividends, service revenue, which is a revenue account. And under expenses, there's 3 accounts: salaries, rent expense, and utility expense. But notice that they're using the T account in order to represent what the general ledger actually looks like when the entries have all been posted into the ledger accounts. Okay. Now, this here video was intended to explain and show the use of a T account. And what we have here is, here's the, like I had said, the chart of accounts would list cash, supplies, okay, so on, equipment, accounts receivable, okay, accounts payable, notes payable, common stock, dividends, service revenue, salary expense, and rent expense, and utility expense. Okay. By listing the ledger accounts, that's a chart of accounts. Okay. But now notice we have balances in those accounts. Right? $200 balance in accounts payable, $10,000 in common stock, $3,100 in service revenue. Okay. Well, if we list the balances in the accounts next to them, okay, what we're doing here is we're actually creating a trial balance. All we need to do is know what date that is, and that takes us to the next slide, our trial balance. Okay, so I'm going to pause here because the thrust of this here video was T accounts, okay, and the use of the T accounts. Right? The use of the T accounts, basically, if you're making a journal entry, you can, if I have a transaction, he's buying, he's selling $10,000 worth of common stock to somebody else for cash. Well, if I'm not sure, am I affecting cash? I make a T account for cash, okay? And I decide, is it a debit or a credit? Well, if it's a debit for 10,000, I put the 10,000 on the debit side. That means I have to credit something else. I have to find a credit under a T account somewhere else, and I look for the account, and that would be common stock. So I can write the 10,000 underneath the common stock, and now I can visually see that my debits equal my credits. Okay, and then I can actually make the journal entry in my journal. Okay, so I've used the T account in order to make a journal entry. Well, once I've posted that entry into the ledger accounts, right? Well, there's my, remember I use these T accounts just to make the journal entries, right? But if I was looking at the journal entry, a debit to cash, a credit to common stock, I shouldn't have erased that, but such is life. Okay, what I can do is now I can use the T account to analyze, to look at what is in a specific ledger account. When I look into cash, I can see I have a debit for 10,000. Well, if you look at these up here, I also had an entry for 12,000, 1,200, 4,000, 150, 1,700, and whatever that amount is, 500. Okay. Maybe I had, a couple of pages of journal entries and I want to know quickly without posting to my ledger accounts what my balance would be. Well, I can look down through these journal pages, and every time I see, the account cash being used, I would write the amount into this T account. Okay. And what that's going to allow me to do is, it's going to allow me to then make a quick down and dirty, oh, what's my balance when I add these all up? Oh, 16,850 as a debit balance, right? That's a debit balance because it's on the left-hand side in that cash account. Notice that these are all in my journals, and I pulled those portions of the journal entry, right? And remember, when we're posting to a ledger account, all we're doing is just rearranging the information. Well, we're not posting just yet. We just want to, maybe I'm the controller or the accountant, and I want to know what my cash balance is, but I don't want to interfere with my bookkeeper, right? Maybe the bookkeeper is going to post later on in the day or maybe at the end of the week. Okay, but I want to know what my cash account is. Well, I can pick up the journal, look for those entries in the journal, and create my T account so I could figure out what my balance is. Okay, so that's the use of the T account. All right, and once you have all of your journal entries in your T accounts, or you have your general ledger accounts themselves, now you can create a trial balance so you can see the listing of the accounts and the balances in those accounts, okay, which is going to be the subject for the next video. Okay, so I'm going to stop here, and if you didn't understand something, watch the video again. But if you have a question, after watching the video a couple of times, feel free to contact an instructor, and I'll see you in the next video.